in truth, we're getting to the gateway of the real show. This is all the warm-up show. You watched XYZ band and another band, and you're waiting for the U2 or the main band to actually come onto the stage. We are just getting to a point for a quarter where we've attained a quarter close that is higher than the previous quarter closes here. So this is a 3-month chart when I say a quarter. So the breakout of the cup and handle are at a quarterly.
What if silver isn't just another commodity, but the next big financial revaluation waiting to happen? Analyst Francis Hunt just dropped one of the boldest forecasts we've ever heard, a potential $330 per ounce target for silver. He says the real story isn't about silver getting stronger, it's about the US dollar getting weaker, and a coming breakout that could mark the end of price suppression in precious metals. If he's right, the next phase for silver could be a once-in-a-generation rally, and it might already be taking shape right now.
Silver market.
Yes. So as I alluded to previously, and if that's okay, if I can share, because I think the people will appreciate the charts. I'll start with gold because of the correlation with gold and silver. This is our structural technical setup. That was a continuation pattern that broke, that delivered the target here. We had a moderate pullback and we've been squeezing up in a rising wedge. I'll just point out that this is a daily chart, by the way, so that's the D for daily. You're getting a little bit of a shooting star here, candlesticks, a bit more rejection here in a constriction, which typically can set up some of that correction that Gary was alluding to technically that can come. That's where our position is, that we're overdue slightly, somewhat on a smaller time frame. Your question started on silver, however, and I want to answer that. And in the more broad macro terms, we're exceedingly bullish that we've been quoted in the Jerusalem Post at our $330 call. This is based on an article that we've done, and I will give you justification for that now in a minute, just so that you know how aggressively bullish we are in the precious metal space. This is also more of a statement about the degree of depreciation of the dollar. I'm afraid it's a hard dollar narrative that goes hand in hand in that, and a commodity overall bull. So it should be quite concerning to everybody. Just on the macro, the silver, the real breakout in nominal terms for silver has not actually officially even begun yet on the quarterly basis, because many people are using the cup and handle reference. It is a technical reference, and I do occasionally use it. We actually have a better mechanism for naming and targeting out of that. But if I just bring that up, so that everyone can see it, I'll just remove some of the lines just so you can see a clean chart. In truth, we're getting to the gateway of the real show. This is all the warm-up show. You watched XYZ band and another band, and you're waiting for the U2 or the main band to actually come onto the stage. We are just getting to a point for a quarter where we've attained a quarter close that is higher than the previous quarter closes here. So this is a 3-month chart when I say a quarter. So the breakout of the cup and handle at a quarterly close level has happened. Previously, you got rejections. Yes, you got close to 50 on both times, tiny bit more so over here. We've held on to a lot more, but it might be a logical place for what's sometimes known as the return move. The fun part starts, and the real breakout for us starts for silver once any technical correction might occur at these levels in and around. I've highlighted that gold shooting star rising wedge after running its 3,770 target we provided. It has traded in the 3,800s, but it's had now $70 rejections in that range, bigger scaled rejections. We might get that little bit more, day or 2, 3, 4, who knows, pullbacks, and that could allow for that silver. The move you don't want to miss, and the entry you don't want to miss, which will be the last chance sub $50, is in this period here, if that occurs as I expect, because that's when we go face meltingly fast. And I'll just show you the technical draw, because we don't just throw out numbers. We have a technical draw for you for that $330 call. This is a macro setup, again a quarterly setup. Quarterly setups tend to be exceedingly reliable for us. We've actually been calling it a breakout on an HVF for quite an extended period, silver. and I'll provide that now with this quick type in. I have to make one change. 81428 and zeroize that. There was a small technical high in 2011 that was higher than the 80s, which I'm sure everyone will agree was a different dollar in the 80s than it was in 2011. So that's the 330 target. We make sure nothing's in the way that's generated. And we've been referring to this breakout as having occurred well down here. There was actually a squeeze within a squeeze. So we've been taking leverage long trades for quite some long time, seeing the volume climb. This is a break. You've run here. The big journey, the next rest point for us is just before the $100 mark. And typically in between, so that's an interim target with a dotted. That's a long-term target. It's not a top call. It's the first inning, but you'll probably have a long gestation period after 380. So those are the key levels to remember. I think we get a tiny bit back. We might support on that first interim. Then we tend to rip in the open spaces pretty fast. You might consolidate for a while and then rip again in running that. And these could come faster than people realize, but I will also highlight each candle is 3 months. So even drawing it as I've drawn it, we're still gone into the 2029s and 30s in making that. So don't ring me next week and say we're not at 330 yet, but it's a big macro, and we're seeing the critical elements of platinum and silver being added now, and I think we're going to see a long period of manipulation, potential containment being unleashed, much like gold had in the 30s when it was a fixed price, and when then the fractional reserve banking started to bring inflation, they had to let it go to 33s, and then you had the unleashing of gold. There's been a softer version of that capped, that rev limiter on the precious metals, and this is what's going to drive all your gifts coming, all your Christmases coming in quite a short time frame, relatively speaking, for the move you're getting. So let me hand back to you there.
Fantastic. Well, let's talk about the gold and silver.
Francis Hunt just outlined one of the boldest long-term silver forecasts we've heard, projecting a potential move to $330 per ounce. But before anyone jumps to conclusions, it's important to unpack what he's actually saying and why this view matters. He begins by comparing silver's structure to gold, pointing out that gold has already completed a major continuation pattern, reached its target near $3,800, and is now facing some short-term rejection candles. This, according to Hunt, could create a short-term pullback, a setup he believes might open the door for silver's next big move. Now, when it comes to silver, Hunt's view is extremely bullish, but he makes it clear that this is not just about silver itself. It's also a reflection of what he calls the depreciation of the US dollar. In other words, this price projection is less about silver becoming stronger and more about the dollar becoming weaker in the years ahead. From a technical standpoint, he explains that the real breakout for silver hasn't even started yet on the quarterly chart. He uses the analogy of a concert, saying that what we've seen so far is just the warm-up act. The main event begins once silver decisively breaks above the previous multi-decade resistance levels near $50. According to his analysis, any correction around this range could be the last opportunity to buy silver below $50 before what he describes as a face-melting rally. That phrase, while dramatic, refers to a high-velocity breakout, a rapid move often seen when long-term resistance finally breaks after years of accumulation. He further supports his forecast with what he calls a macro HVF, high volatility funnel structure, which has been forming since the 1980s. Based on this technical model, his first major long-term target is near $100, with a continuation that could eventually stretch to the $330 region. A level he stresses is not a short-term top, but part of a broader multi-year trend, possibly extending into the late 2020s. Importantly, Hunt also hints at something larger, the end of what he calls containment in the precious metals market. He compares this to the 1930s period when gold's fixed price was finally released, allowing it to reprice naturally as inflation and monetary expansion increased. He suggests a similar dynamic may now be unfolding for silver and platinum. If his analysis proves accurate, it means we're entering a phase where precious metals could begin revaluing sharply as fiat currencies continue to lose real-world purchasing power. Still, as always, investors should remember that these projections are based on long-term macro structures, not short-term trading setups. Each quarterly candle represents 3 months of market action, so while the vision is clear, the timeline remains extended. In essence, Hunt's message is this: silver's story isn't about hype, it's about the slow erosion of currency value, the end of price suppression, and the return of real price discovery in the precious metals market. Whether it takes 5 years or 10, this analysis underscores why silver continues to attract long-term investors who see it not just as a metal, but as a reflection of confidence in the global monetary system itself.